What's up, everyone? Welcome to the Sneaker Homegirls podcast. I'm Roszettie Gutierrez-Uy.
And I am Maria DiMaggio Hickman. We're two Las Vegas realtors blending real estate, hustle, and sneaker culture all in one place.
If you are into real estate, entrepreneurship, and making big moves, you're in the right spot.
We're breaking down market trends, sharing behind-the-scenes stories, and giving you the game on how to build wealth through real estate.
And of course, we're talking sneakers, culture, and how we stay fresh while handling business.
So hit that like button, subscribe, and let's get into it. This is the Sneaker Homegirls podcast.
Welcome back to the Sneaker Homegirls podcast. Today we have Kelsey Cosgrove here with us to talk about self-employed bank statement loans. How are you, Kelsey?
Good, great. How are you?
Good. It is smoky in the air today.
It is.
I think there's a fire in California.
Mm-hmm.
Something like
Yeah, I feel like we haven't had a lot this summer, but it's happening now.
Just the fire that took out LA.
Yeah. Well, yes.
It's just so crazy how often that happens for us.
Right. And that's what I mean. Like, I feel like I walked out yesterday and was like, oh, it's smoky. And I guess I just hadn't noticed it much this summer. And then yesterday I was like, holy crap.
It kind of gives me like zombie apocalypse vibes.
Yeah.
And it's like red. So I'm always like, is something happening?
Right.
Like, what is going on?
Yes, I know. That was something I had to get used to when I moved here was the change in air from things happening around us and how it comes and like settles into the city.
And the air quality is not good right now.
No.
So you get like that notification on your phone that's really loud. It's like,
right.
And you're always in a public place.
Everybody hold your breath. So.
And the masks are coming back. But it's back to school, so hopefully the air clears out.
Yeah.
Is the fire out?
I don't know.
I hope it's out.
Yeah.
There's a bit of traffic. I'm sure coming back from California with the fires is not fun. You're just on that like two road highway.
Right. Well, I don't feel like that drive is ever fun anyways. So I'm sure it gets worse.
Well, today we're going to talk about bank statement loans. If you are employer, or no, if you're not an employer, if you're self-employed, or if you're a contractor, independent contractor, the myth is always that, you know, I don't qualify to buy a home and I am not able to do down payment assistance, and that's not really true.
No, I get that a lot when I talk to borrowers. They're like, well, like the problem is, or we're in this tricky situation, and then they are like, well, my husband's self-employed. And I'm like, oh, that's not a tricky situation. We just have to go a different route. So yeah, it's definitely a misconception on who can do home loans. So that's really something really cool we can talk about today.
Yeah, when it comes to self-employed, what are the typical documents that you should be prepared for or search in your archive for things in your email?
Yeah, so there's a couple different ways we can go about it. There's 12 and 24 month bank statements that we can look at. We can look at profit and loss statements, asset depletion, and a lot of times we can do tax returns, but the problem is that when you use just tax returns, that you aren't showing exact as much that you actually made. So that's why we default to the bank statement. So there's tons of different options depending on your business, your profits, and that kind of thing. So it's definitely not hold into one particular thing that we have to do for our self-employed borrowers. They actually have a lot more options than they think most of the time.
Yeah, because traditionally you hear FHA loan, conventional loan, VA loan, and if you're self-employed, depending on how you structure your business, you don't always understand the opportunities that you have as a business owner to be able to buy your own house.
Right. Everyone thinks they have to have a W-2 in order to get qualified, and it's just not true. We've got options for you. So we have one particular program that is really cool. It's a minimum 660 FICO score, so pretty good score there to be able to use. It's up to 3.5 million for your loan amount, so very flexible loan amount. Has interest rate buy down options, so there's just a lot of different opportunities that we can offer that is for your bank statement loan for your self-employed borrowers.
Yeah, and I think sometimes when borrowers are shopping for a loan, or maybe they haven't even heard that they qualify, they think that it's limited. But I think what, breaking it down to English, is that it's all dependent on how you run your business, how you pay yourself, where the money goes, how much money you're making,
Right.
which is why they need the 12-month bank statements, because we kind of got to prove that you're making money.
Right.
You know,
Yes.
we can't
Yeah.
just give you a check
Yeah.
for $3 million with a house. It's not 2008.
Right.
But I think that's really interesting because more people since COVID, with all this SBA loans, they are self-employed, or maybe they, have switched their career and they're trying a new business venture that, down the line you can prepare to buy your own home if you don't own one right now.
Yeah, absolutely. There's, like I said, there's lots of options. We've got several different types of programs. It's not just one. You're not holden to one. You can make a decision that's best for you and the type of business that you're running.
So as far as like debt to income ratio goes, for a traditional loan that's not a bank statement loan, what is the amount? Like 40% of your income? 40 to 43% of your debt to income ratio? Is it similar with bank statements, or how does that work?
Yeah. The DTI is basically the same. One of the biggest difference, especially like this particular program that we are looking at, is the loan to value. Loan to value for the home is a little lower. Usually we're at 96.5%. This one, the maximum loan to value is 90%. Depending on whether it's going to be a primary, second home investment, it could go down as low as 80% loan to value. So that's one of the biggest factors, but debt to income is going to be about the same. Your credit score, that 660, is pretty standard for almost any loan. So yeah, those are really the only things that you have to look at.
And as far as down payment goes for self-employed borrowers, what is the percentage that they can prepare for? Or are there grants similar to like first-time homebuyer grants for self-employed people?
Yeah, so you're going to see those same down payment requirements as far as the 3%, 3.5%. Those don't really change when it comes to the bank statement loans. Essentially what we're doing with these bank statement loans is it's just a different way to qualify you. So the qualifying factors are all pretty similar. We're just using different documentation to get you qualified.
I think that's interesting because I think the most common objection when it comes to applying for a home loan, or let's say connecting with a lender, is finding your paperwork.
Yes.
Yeah. Any kind of loan that you get, I feel like the thing that's going to take the most time is tracking down your employer paperwork, getting verification of employment, which we were talking a little bit about before we filmed the podcast, how some lenders out there are not fully qualifying these clients before they're out shopping.
Right.
And why that's important, because you may get under contract and you're not fully underwritten, meaning that the bank or the institution you're lending the money from doesn't have all the paperwork that you need, forcing a stressful time towards the end of your transaction, which may be 30, 60 days.
Right.
And as anyone knows, in real estate, it's very stressful no matter how many houses you buy, first one, 10th one, 100th one, whatever that is. Each transaction comes with a little bit of risk.
Right. Yeah.
And having a lender by your side is very crucial. As far as like the self-employed goes, how do you know that you're ready to apply for a loan? Like how many bank statements, like is it only 2 years? Do you have to be doing this job for a long time? How does that work?
Yeah, so 2 years of employment history is what we typically look for. It doesn't have to be the same job. It just needs to be consistent employment history. The only caveat to that is like if you're in school, you can use transcripts as that work history as well. So again, there's lots of flexibility. You're not pigeonholed into one specific thing. So we can do 12 or 24-month documentation. It really depends on what we're needing to see and the particular loan that you're trying to get. We, again, always look for that 2 years of consistent employment, not necessarily the same employer. So if you've changed jobs or what have you, or you're just getting out of school, or this is just your first year of work and you were in school, there's different ways we can navigate and get creative to be able to get you that loan.
When I think of self-employed or bank statement type of loans, I think of your cocktail servers, your bartenders, maybe your 1099 gig workers, your production workers.
Lots of Vegas, right?
Lots of Vegas. But then I also think of like your tradespeople who are, hired per job or maybe per project. How does that work? Is it mainly like, say, like construction workers, right? They're working on the I-15, the Summerlin Parkway. Most of them are union, but for those workers, do you think it's common that they do the bank statement loan, or is it like a little mixture of both?
Yeah. So those are definitely going to be those gig workers are going to be the ones that can definitely benefit from these kinds of bank statement loan programs for sure, because that's how we're going to track their income and be able to see exactly how much they're making over the course of a 24-month period, especially, and that's having a job that your income isn't necessarily consistent is another group of people that these bank statement loans is made for. So, you might be a self-employed borrower, or you might be a gig worker where you're making a good amount of money over your 12 months, but it's not a consistent amount like you would see in a W-2 salaried employer.
Yeah, and I think something I've heard that's really common is like, what do I do with my money in my couch?
I was just getting ready to say, if you are one of those workers, do not take that money out and just keep it to the side as your savings for your house. Please keep it in your bank. Because that is one of the common issues that I've come across with our self-employed borrowers or our borrowers who have those gig type jobs, is that they put their money in the mattress, right? It's that mattress money, and then they're like, I've saved up my money, I'm ready to go, I'm ready to have a decent down payment. And as a lender, you hear like, oh yeah, I can do 20% down. You're like, this is great, like check. Yeah, so the money is in cash, so when should I put it in my bank? I'm like, oh no, what?
Same with paying off collections, right? Something you guys told me recently was, let's say you have a collection that's been owed, what people try to do is pay it. But what it actually does is brings it back to the top. So I always recommend, if you are interested in buying a home with a bank statement loan, to don't do anything yet. Just leave everything where it's at, okay?
Yes.
And then meet with a lender and a financial advisor to kind of like walk you through these steps, because sometimes, let's say they pay all the debt off, or they pay their student loan, or,
Right.
whatever the dynamics are. Sometimes it's not as helpful as they intended it to be, right? They're like feeling so good, they're paying it off when they could have spent the dollars that they have in other, areas,
Right.
and also kept their money in the bank.
Yes, exactly. So one, if you do have that mattress money that we call it, it needs to be in the bank for at least 2 months to be seasoned. So if you have that and you're watching and you're like, oh, I want to do a bank statement loan, but oh no, that's exactly where my money is at, get it in the bank so it can start getting seasoned, so we can use it as qualified money and qualified assets. And then for the, oh God, I just totally blanked. My
Feels like
coffee
Monday.
hasn't kicked in yet. I need to keep sipping the coffee. What were you saying before with the we have paying off your debts. Jeez. Goodness. Okay.
We can edit it.
We're gonna keep drinking the
You can
coffee.
take a sip.
Yeah, thank you.
You can take a sip.
Thank you.
You deserve that. Okay.
You got two.
Duncan runs America.
Right? You got, yeah, Duncan runs my house. Well, aside from my 2 children that also run my house and cause my brain to melt to mush. So with your debts and your credit, that's another thing, like you said, that we're like, oh, I paid off all my credit cards. So my credit score went from a 680 to a 720. And it's like, oh, that's great. But like a 680 is very qualifiable as far as a credit score goes. And so now how much money do you have in savings? Oh, well, I used my money in savings to pay off all my debts. And it's like, so now we don't have any assets to your name, but you do have a better credit score. So it's like, you gotta weigh what is necessary. So it's always best to just get on the phone with us and let's talk it out. Let's game plan. We never say no. We always just say, how can we make it happen? And I think that's just the best first step is talk to a lender, talk to a financial advisor, in order to get your finances where they need to be.
Something I thought that was cool during my refinance that I did a few years ago is that you can actually pay debts out of escrow. So, you know, sometimes just meeting with someone first before like jumping, you know, I know it feels good to jump, that's fine. We just want to jump with you, you know?
Yes.
We all jump together.
You want to make sure that when you're jumping, you jump
into
you make
water.
It all, you make it all the way across, and you don't just fall off the cliff. Yeah.
You make sure it's clear down there, you know, don't just jump in there. I think it helps borrowers who may not understand it. I mean, we live, eat, and breathe this every day. So the emails that we get, the knowledge that we're around, you know, the wild scenarios that we hear all the time. Like, I think the key is just to meet with someone, especially now. Like, I bought my house a few years ago. It's almost doubled. Yeah. So the stress of not having home ownership in your corner to be able to lean on in situations like that, rentals can be, you know, 30 days and you're out. Yeah. And sometimes as a gig worker, if you don't secure your housing, it can be very stressful, and maybe you have to get a roommate. You know, us in our 30s, we don't like roommates.
Right. Yes. Need to tell my husband that. I don't like the roommate situation.
We have separate getting ready areas.
We used to, and I think that my husband really liked it because he keeps reminding me of when I used to use the guest room as like my closet and getting ready area, and I'm like, I don't understand what you're trying to tell me here. You mean you
sounds
don't?
Like you need to go over there,
right? What, are you saying you want to do that now? Go right ahead, but like my makeup is here, and this is where I'm staying. So
you're like, actually, I'd like a whole credenza right here that you can build over the weekend.
Yes, yeah, right. That is something we learned though when we bought our first house, was that our master bathroom was a single sink.
Oh, no.
It's funny what you learn that matters to you after you buy your first house. You're like, I feel like when you're a first time home buyer, you're like really excited just to own, and you're like, oh, this house looks nice, or we love this area, and I only care about cost or monthly payment. And then you get in it and you're like, oh no, I actually would have paid an extra $200 a month for X, Y, and Z. And you realize that as you're living in that first home. And that's why they say your first home is usually never your forever home, right? So we learned that we had to have a double vanity in the master. Like, it was a non-negotiable.
You're both washing your hands together.
Right, exactly. Non-negotiable had to happen. So, and now we have one, and he still wants me to.
See, the next step is this.
Right.
Where they're completely separate. Like, we don't even touch sinks, you know, like near the same area. I can like spin in a circle and I don't touch you. That's like my favorite, because I like to dance when I get ready. So there's always like a speaker in there. I'm getting ready, so it's got to be a little fun. You're in my room, you know, like I got long arms, like.
Yes, right. I used to always like to sit down when I would get ready, and sit down, you sip on, you know, coffee or whatever, and relax. And it was like this whole like therapeutic process of getting ready. And now you have 2 kids, and you're like, how can I look the best in the least amount of time?
You're like, okay, I'm 5 minutes.
I've got like some makeup upstairs, some downstairs, because I've like had to run downstairs to put it on as we're walking out the door. And yeah, it's a whole different dynamic when you get kids involved.
You know, you just open the medicine cabinet and see what's in there, and then you try your best.
Right, exactly.
You're like, is this gonna work? So something that I wanted to talk about, what's the difference for, maybe they are W-2 employees, what's the main difference between a conventional loan and a bank statement loan? Do you think some people who do qualify for a conventional loan choose a bank statement loan? Like, how does a borrower decide like what program to pick from?
Yeah, so it's still going to be, so it's a loan product is the bank statement loan. So you're still going to have that conventional tag to it. So it's still going to be considered it's a bank statement loan that still has that, how do I want to explain it? So you're still going to be doing the same things. I mean, it's like I said before, the only difference is how we're qualifying you. it's still going to have, your down payment's going to be the same requirements, the credit score, the debt to income. We're still going off those same markers. Your qualifying paperwork changes.
Okay, that's the only thing that changes.
Yeah.
Okay, so then if it's similar to a conventional loan, are there 0% conventional bank statement loans?
Where we do down payment, like a down payment
Yes.
assistance. Yeah. So, and the other thing is, like, you can have two borrowers. One, we're using bank statements to qualify their income. The other, we're using W-2 on the same loan.
Okay.
So it really is just a different way to qualify the borrower.
Okay. So it's just what they require to deem them as like, I can buy this house.
Yes.
Yeah.
And so we're using, so then, like, in order to use that process, there are other things involved, like the 660 credit score, right? So if we're going to use this particular bank statement loan program, you need a 660 minimum credit score, and the loan to value has to be at no higher than 90%, even if your co-borrower is a W-2, because we're going to use the bank statement loan to qualify their income.
So for example, if the house is $500,000 and you're a bank statement loan, does that mean that the bank is only, what did you say, 10%?
Yeah.
10%.
The loan to value.
So 90% of the loan, meaning that the bank statement loan borrower will have to get $100,000. Is that right? At a $500,000 sales price? 10%? Like, how much would they need? Like, let's say the house is 500. I know, sorry.
Listen, just because I'm a lender doesn't mean I'm just like the
I threw it out
calculator
there.
isn't
I put
up
her on the
here.
spot. I'm so sorry. But
we use calculators, and
you can use your calculator. You may have resources, Miss Cosgrove. But I'm just trying to think, like, numbers wise. Like, if you're a bank statement loan borrower and you're ready to buy a house, like, how much money is like a healthy amount of money to have to be applying for a $500,000 sales price house?
Gotcha. Okay, I think I understand your question better. So, specific programs will have different reserve marks. So, this specific one is actually 6 month. It depends on the purchase price. So most of the purchase prices are at least 6 months reserved. And then there are, as we go up, because I said this particular one can go up to $3.5 million. That one starts to get closer to 12-month reserves in the bank. So, yes, so any loans over $2 million are going to be 12-month reserve. The smaller end of that is going to be 6 months of reserves.
And by reserve, you mean whatever the monthly statement is times 12.
Correct.
Okay.
Yeah.
And that's why you call Kelsey and ask what number, so it's really mean for you.
Yes.
But that's interesting. You can go up to $3 million. That's actually really nice.
Yeah. Yeah.
Because jumbo is only 1.6.
Yeah, and it doesn't have to be a primary residence. It can be a second home. It can be an investment property.
Okay.
Yeah. So these bank statement programs can be great for real estate investors as well.
Yeah.
If you're able to get into a program that allows for investment properties, it can be awesome to use for those as well.
Yeah, that's a good idea because most of them don't have payroll.
Right, exactly.
Especially with all the payroll changes.
Yeah.
But the best news that we have today is that rates are the lowest they've ever been. With the feds releasing the job report and not dropping rates as much as we would like.
Right.
What do you think about our market today as far as like loans go and just the year that we've had, right? And the changes of what real estate has to come.
Yeah, so obviously rates are just this crazy hot topic. They're still high in comparison. Everyone wants to talk about 2021 rates. So we're talking about how rates are dropping and the market's heating up, and this is the time, buyers need to start getting on board, and sellers, because people are afraid to sell because then they're like, well, then I have to lock in a higher rate when I buy. But they are never going, as long as we don't have another pandemic, fingers crossed, we're probably not going to see rates in that ballpark for a long while. But they are dropping, and it is an exciting time to get into the market right now. We're still in that area of rates are coming down, prices are still in a good spot. because that's the thing you have to watch, right? Is as those rates drop, the prices are going to go up, and we're going to start seeing an increase in home prices. And so right now we're in kind of, I would like to think, a sweet spot of we're coming down. We're not seeing a spike yet in those housing prices, and it's a great time to get in the market. And if you're in Vegas, it's been one of the coolest summers we've had. So if you're like, I don't want to buy right now because I don't want to move in July, the temps are great. So the market temps are great. The weather temps are great. It's a perfect time to buy your house.
I know the weather has been so good, and by good I mean 100.
Yeah, right. I know.
Because usually August gets
No,
to like
it's
120.
Right.
And
Yeah.
I'm like, how did I walk to McDonald's as a middle schooler
Right.
before? Like I don't remember this.
Yes, that's one thing. My husband, we always refuse to buy a moving company, mainly because my husband is stubborn, and I've made him move in the summer. That was almost always because I used to be in education, so that was when we were free, was in the summer. So we almost always would move. Our lease would end in the summer, and we would have to move. And so he always would complain about that. Then I started having him move during football season, and then that was a whole other complaint. But the temperatures at the time of moving is always something I think about because I had to hear it from my husband all the time.
Yeah.
And I'm like, oh, well, it makes sense. But yeah, this has been, I saw it on Instagram. It's where I get all my news, that Vegas has had one of the coolest summers this year.
It's been hot.
It has
it
been.
gets
So I was
cold
like,
in
what?
October.
Says who?
So I'm like, it's still dreadful to go to your mailbox.
Yes.
But it is cooler than normal.
Yeah.
But the sun here, it'll get ya.
Yeah.
Like if you don't wear sunscreen, like I'll turn black.
Right.
Like in a few hours, which I
Yeah.
think is crazy. But I always keep that in consideration when I meet with clients for the first time. They always say, when's the best time to buy? When's the best time to sell? And in my opinion, it's when do you want to move?
Right.
Like, do
Yeah.
you want to move during the summer if you're a teacher? Do you want to move in the middle of football season
Right.
when like you have games and practices?
Yeah.
Like, do you want to be moving during Thanksgiving or maybe when CES is in town and you have like a really busy job like
Yeah.
to attend to? So I always think that's a big factor. But of course, the demand is what will drive the market. If we have buyers who feel the affordability of being able to get into their first home, you're gonna believe that price will go up.
Yeah.
Because if there's 5 people who are fully qualified that want that house, they will pay $10,000 to $25,000 more just to lock it in.
Yeah.
And I always suggest to people, because there's a land cost and then there's a property cost. But the reality is do you want it?
Right.
Are you going to be upset if you lose this house?
Yeah.
Like, that's always my biggest question, because the money wise per month isn't as much as people think,
Yeah.
right? It's probably like $60 per month or 150 at most, depending on, how much aggressive you can be.
Right.
Which is why I think it's awesome to meet with the lender, because they can tell you if there's a gap there.
Yeah.
Right? If you're approved for $400,000 and you are looking around 260, 280, and you can afford 325, 350, but you love your life
Right.
a little more,
Yes.
and you don't necessarily want to do that, those buyers right now are in high demand. So if there's a beautiful home in a nice neighborhood with an affordable monthly mortgage payment, you better believe people are going to be running to that
Yeah.
house with their realtor to check it out.
Yeah. Absolutely.
And if they like it, I think it's always good to just see if that's maybe a possibility you want to explore. And right now is a great time because a lot of people, like you said, are so focused on the rates.
Yeah.
And the reality is like, what does that even mean? Like, the rates are never going to be 1% again.
No.
If they do go 1%, it's going to crash market.
Yeah.
It was truly like obnoxious to even allow that. And I remember when I first got licensed, I'm like telling people about this 1%, and they were like, it's high. And now we're at 6, barely getting 5,
Yeah.
and now you see the changes of, rents going up, or the not having affordable housing take into effect, having to move into an apartment, moving in the summer.
Right.
So
Yes.
I feel that Vegas has grown so fast as an economy, the housing hasn't really kept up with the construction, because it's the same workers working on all the communities around town. And not only that, they're building homes that are not that affordable for your first time home buyer or a single borrower.
Yeah, absolutely. I mean, I don't just talk the talk, I walk the walk. So when I tell my clients, if you have a house that you love right now that is at the price that you are targeting, you can afford, don't get hung up on the rate, because you can refinance. And I don't say that lightly. I don't say that as a way to get a client to buy a house so that I get a paycheck, right? I truly mean that. And I mean that in the sense that that's exactly what I did. So we just bought our house in November, and we knew that we wanted to live in a specific area. We knew what our price point was, and we wanted to start owning again. We rented for a year to kind of reestablish our finances. And so we bought into this idea of the rates are high, buy the house we want at the price we like, and then we'll refinance later. My interest rate, 7.5%. I'm very transparent with my clients about that, because I don't want them to think that I'm just trying to get them to buy a house in a poor scenario or in a bad situation. So I fully believe when I tell my clients, date the rate, marry the home price, right? Because I did that too. So I'm very much someone that I'm not going to give you advice if I don't believe that it is true and helpful for you. It's when we're telling clients to do these things, it's not because we just want a paycheck. It's because it's going to be best for them, rather than waiting for these rates to drop and to get down. Like, you might be waiting forever. And now we're seeing whole communities being built that are just rentals. And it's
wild.
It's wild. Like, the margin for being able to be a homeowner is getting smaller and smaller and smaller. And the longer you wait, the more difficult it's going to be to get into that first home. But I feel like once you buy your first home, it makes buying your second one so much easier. It truly is just this. I went from thinking I was never going to be able to be a homeowner to being able to game plan. We're going to sell, we're going to rent for a year or two, then we're going to buy again, and being very confident in that game plan. And it's just that first step of talking to someone that is transparent, that you feel like you can trust, and going from there and strategizing a plan for you.
Yeah, absolutely. And I think borrowers today that are watching this or are thinking about buying a house, your average first-time home buyer is 37 years old. So no matter what age you are or what you do for work, it doesn't mean that home ownership isn't possible.
Yeah.
It just means that you might need to create some sort of game plan for yourself, for your family, to see how you can achieve that goal and work towards it.
Yeah.
And
absolutely.
it's not I didn't buy for $60,000, I'm never gonna own. We can't predict the future. All we can do is make sure that the property is affordable for you, that you're able to pay the monthly payment and gain equity and live in an investment, because you can't live in the stock market.
Right.
You can't just have two sinks in the stock market.
Yes,
and be
exactly.
able to really cherish that investment. But it also requires money, right? You got to have a job and have intention to be able to afford that. But rent is 100% interest.
Yeah.
And being in rooms where you can learn more about the process, like our homebuyer workshop that we have every month, to be able to learn what those steps are, see how you can, cross the finish line, and, we're happy to guide you that way.
Yeah. Absolutely.
Well, thank you, Kelsey, so much for today. If you haven't already, please subscribe to our YouTube channel, support us on social media, and we'll see you next time. That's a wrap for this episode of the Sneaker Homegirls podcast.
We appreciate you tapping in and rocking it with us. Real estate, hustle, and sneakers, that's what we do.
If you got value from this episode, make sure to hit that like, comment, and subscribe to our channel. And don't forget to turn on the notification bell so you never miss an episode.
Follow us on Instagram at The Sneaker Homegirls for behind-the-scenes content, market updates, and of course, sneaker drops.
Let us know in the comments what topics you'd like for us to cover next. We love hearing from you.
Until next time, keep hustling, stay fresh, and we'll catch you on the next episode.